Welcome back to the knowledge-based playlist on the development strategy search. As I mentioned in the last video, we'll be going through the property analyzer tool today to provide a 10-year forecast on a property we've developed or are looking at developing, to look at how it will impact our property, translating into dollars, cents, equity, cash flow, and so we can make decisions now on whether we are able to hold property or whether we sell everything and walk away. In this example, we're going to assume we bought the property at 4 Makaranga Street, Marsden for $500,000 and subdivided the back block into 2 individual long lots. Once we spoke to council, we were able to confirm that we could fit 2 lots on the back, so that was an added bonus. The purchase and subdivision costs were $140,000. So all up, our total cost $640,000. So after selling the 2 blocks of land for $220,000 each, we now only owe $200,000 on that front house. So we're going to put that property into our analyzer so that we can understand whether or not it's going to be valuable for us to hold on to that. So here we've popped in the information surrounding our property. We obviously don't have a deposit or purchase costs associated. They were already factored in with the sale of the 2 blocks of land at the front. So we only owe $200,000 and we estimated that the value is $350,000. Pretty conservative considering the median price is $399 for a 3-bedroom house in Marsden. Let's have a look at our lending information. So we've got our lender's NAB, interest only at 30 years, no establishment fee, we got that waived at settlement, and we've got 4.13 for the interest rate, and we've also got our loan at $200,500. So simply plugging in your information to reflect your position with this property. So rent and expenses now we move to. We've factored in 51 weeks, so 1 week of vacancy. We've estimated that we're probably going to get $370 for that property. Now we know there's a lot less land, but we still have the intrinsic value in the house for the renter. So pretty close, we think we're going to be able to maintain that rental amount. We've factored in the rates here, $1,500. Letting fee costs usually about 1 week's rent, repairs and maintenance, insurance, management fees in Queensland around 7.7, and any additional service contracts. Now these are all annual property expenses as well. Let's move through to tax and market. We're going to reflect that we purchased this property in our personal name. If you had purchased it in a trust or a self-managed super fund, you could create that additional equity here as well. We factored in consumer price index at 1.8. You can be a bit more conservative if you like, but that's pretty on par at the moment. Capital growth 4.81. We've got the note here for the historical capital growth for houses in Marsden at 4.8. So that's where we've gotten that information from. Again, if you believe it's going to be higher in the next year due to some new infrastructure or some changes you've spoken to the council about, you can factor that in here as well. We've also got a depreciation calculator, so you can choose to include that if you use depreciation. If you don't and you'd like some more information, please feel free to contact us here. We'll be able to set you up with a free depreciation quote. So all you need to do is note the nearest capital city, whether it's a house, and the year of construction was completed. So that's going to decide how much depreciation or tax breaks you can get based on that property. So let's move through to the results. All right, so this is our 10-year forecast. So after plugging in that information, we can have a look at the position we'll be in now up until 10 years if we hold on to this house at the front with the smaller land underneath. So we've factored in our capital growth rate over the 10 years there, along with the consumer price index we entered. We can see the property market value slowly increasing over 10 years with the CPI and capital growth rate taken into account. Our amount of loan is remaining stagnant at $201,000, remembering we are not paying any principal, just the interest at this stage. So if you're paying P&I, you can update that, and obviously your loan will be decreasing over that time. We've got the statistics here, equity in the property. So by holding on to this property and selling those blocks, we've actually been able to manufacture quite a chunk of equity, which is maintained and held within this property. So it doesn't mean that we need to sell this property to access that equity. What we can actually do is find out here straight away. We let you know the surplus equity you can use to reinvest. So at this stage, you've got $79,000 that you can access through a deposit and cost equity loan to purchase again. And we've estimated here that your buying power would be around $395,000. So you don't need to sell this property to continue to invest. And this is why this is very valuable information. So a lot of people may think they need to sell the property to continue, but there is the option to hold as well. Now, if the next property you wanted to purchase was going to be $600,000, then you'd need to wait till year 3 for the equity to grow in your property to enable you to purchase something around the $600,000 mark. We've got the rental income here for $370 per week. And you can see that's increasing with CPI and capital growth as well. Our gross yield in a percentage, 9.44, so before expenses. Net yield after expenses, 6.92%. So that's pretty strong at this stage. We would expect to see it up here considering that we've got quite a bit of equity built up in the property. Our cash deductions based on those property expenses we entered per annum and the interest you're paying on your loan. So after all of that information is taken into consideration, we are given the pre-tax cash flow per annum, $5,546 per year you'll be making on this property if you retain it, and pre-tax cash flow per week, $107. So you've also got your depreciation information there as well if that's applicable for you. So it'll adjust it based on your tax return and depreciation benefits, or it may reduce if you're not gaining enough depreciation. All right, so now that we've had a look at that 10-year forecast, you can see just how simple, easy and powerful this tool is. It puts it in black and white so you can make decisions now with confidence about whether you're going to retain a property, whether you should sell it, and when you're looking at deals that are live on the market as well. All right, well, thank you again for tuning in. I hope you found this development playlist instructive and valuable. If you have any questions, please contact us here at Real Estate Investor or get in contact with your portfolio manager. Thank you, everyone.